Hi, I'm Mary Wilson Keener, your Frisco CPA. I'm going to talk to you today about the Fiscal Cliff Act. Most people are wanting to know a summary of what really changed. Well, basically, it permanently extends certain provisions that were in the Economic Growth and Tax Relief Reconciliation Act of 2001 and the Jobs and Growth Tax Relief Reconciliation Act of 2003. It also addresses the alternative minimum tax. This Fiscal Cliff Act temporarily extends certain tax provisions that lapsed on December 31st, 2012 and others that had expired on December 31st, 2011. So if you have done recent tax projections based on 2012 information, you will need to recalculate your calculations. Among the provisions not addressed was the expiration of the temporary lower 4.2% employees portion of Social Security, and that has reverted back to 6.2% on January 1, 2013. The tax rates that were in effect in 2011 are now permanent for 2012 and beyond, at least permanent until there is another tax law. The rates 10, 15, 25, 28, 33, and 35 are still in place. The new top rate is 39.6, and that is imposed on single taxpayers making more than $400,000 taxable income and marrieds filing jointly making more than $450,000. You might notice that $450,000 divided by 2 is $225,000 for married individuals. So there is somewhat of a marriage penalty in that one provision. It's back! The phase-out of itemized deductions and personal exemptions. The phase-out is reinstated at $250,000 for singles and $275,000 for heads of household and $300,000 for married filing jointly. Phase-out means that the amount begins to decrease and disappears entirely within a range of income. Itemized deductions include a combined total of deductible medical expenses, mortgage interest, real estate tax, contributions, and unreimbursed employee expenses. The personal exemption is the amount subtracted for each dependent. So you realize that income can be reached so that there's no reduction of taxable income for either category of these expenses. Capital gains and dividends. Taxpayers in the middle tax bracket remain at 15% tax on capital gains. Taxpayers in the 10% and 15% tax bracket will pay 0% capital gains. That's just as it has been for the past several years. Now the top income tax bracket will pay 20% on capital gains. Add to that the new 3.8% medical tax for higher brackets, and it accumulates to 23.8% for the top bracket on capital gains. The exemption for the alternative minimum tax on individuals is permanently indexed for inflation. The AMT tax is not understood by many taxpayers. Basically, it's a tax calculated by a different formula, adding back itemized deductions and other items to arrive at a minimum tax that should be paid. If the tax calculated by the tax tables is lower, then the AMT tax is applied. The individual credits that have become familiar that expired either at the end of 2011 or 2012 have been extended permanently. Some of those are the American Opportunity Tax Credit for qualified tuition and other expenses, the teacher credit, the $250 credit for certain expenses, the mortgage insurance premium being deductible for some taxpayers, the deduction of either state income tax or state sales tax, the tax-free distribution from individual retirement plans for charitable purposes. There are many others, but these are the common ones. So you should just look at it, look at the law if you think that something else should be there. It might be there. The increased expensing amounts under Section 179 are extended through 2013. This allows depreciable business assets to be depreciated 100% in the first year. Check to see that the asset you have purchased meets the guidelines. The 50% first-year bonus depreciation was also extended for 1 year. Apart from the Fiscal Cliff Act, There's a new Medicare tax that begins January 1 of 2013. It is an added 0.9% for those making over $200,000 single or $250,000 for marrieds to the already 1.5% that currently exist, which adds up to 2.35% Medicare tax for the amount of income over these amounts. It is so involved, so technical, that we've done another video on the new Medicare tax that is applied from the Affordable Health Care Act of 2010. Please refer to that video for more details. As I said at the beginning, I am Mary Wilson Keener. I work in Frisco, and I'm your Frisco CPA. I also service clients in other areas, such as Plano. So I'm a Plano accountant, I'm a McKinney accountant, and other areas like Little Elm, and the areas you might find around this part of the country, North Texas. Please call our office if you would like more information about any of these topics. Our number is 972-377-7078.